All hail 10,000 subscribers. We welcome you in.
It's our first live stream since the 10,000 mark.
We've been prefacing this all year, some sort of 10,000 subscribers celebration, and we are having it. Paul, I didn't even tell you, I contacted the wrestling room today. We're going to do some sort of sumo
Did you really?
We figured out that me wrestling Paul, I weigh 270, he weighs 120 pounds soaking wet, and that if we wrestled each other, and he doesn't even actually know anything about wrestling, so like, We're going to get the sumo suits ordered. We have a wrestling place, and we'll have a little fun. We'll get it filmed and get it out there. Yes, Benjamin will work. Yeah, you're right, sumo suits. I don't know if you came up with that, but it was a great idea. Maybe it was John Thiesing that came up with this. But anyway, Rumble in the Jungle. That's right, Sealan.
Rumble in Richfield.
We love you guys. Thanks for your support. Paul, what did 10,000 feel like to you? Because it was a weird feeling. We've been talking about it like it was this crazy number.
I think you, Gio, and I were hitting a refresh on the app. I'm not exaggerating to say every 3 seconds for about 30 minutes.
Yes. Oh, Gio's on right now. I see you, my friend.
What's
my
up,
dear
Gio?
son, 10-year-old Gio. Gio, we're thinking about having Gio on the podcast for a little comic relief. Not the podcast, on the show, on the live stream on Thursday. We might have a 10-year-old. He will go over his stock portfolio, what he's loving, what he's avoiding, his gains and losses. It might be interesting to have a child on, because I think a lot of this information, Paul, as you described, we try and, I would say the word is dumb it down for normal people, but we really want to teach people about investing on a smaller scale and clear away the clickbait BS and sort of give you the idea that you can retire with a lot of money by taking some disciplined steps. And so that is our goal, and we appreciate our new viewers joining in, and of course our OG followers who have supported us from the get-go. We will talk about Patreon as well today. If you're a patron, we love you. You know you're in the drawing for 2 Tesla Model 3s this year. So 2 of our patrons will be getting a Tesla this year, which is absurd, and it's coming out of Uncle Paul's pocket. But I welcome in our Lord and Savior, Paul Gabriel, from our Richfield.
Lord and Savior
of investing. Paul, let me finish. Paul, how are you?
I'm wonderful. Did you see my comment the other day on Instagram about Ryan Day?
I did not, but where are you going with this?
Well, it's offensive, but I was just going to say I did have a prayer in the Instagram comment. I said, "Dear Lord Jesus, who I love so much."
Lord and baby Jesus. Gio, my son, did start reading the book, the little book that beats the market. I highly advise, Paul, you got that book for me as a gift, and it is a great book if you're still new to this. I started rereading it again, Paul, just to get the basic mindset about what companies are worth and what to buy them at, and it's a wonderful book. So we welcome everyone in. Don, Benjamin, Ruiz, Mason, I see you there. Goldie, hello, everyone. We welcome you in. Paul, today's show is about real estate investing for beginners. Now listen, we are not going to get the huge numbers today because real estate is a slow and steady, somewhat complicated venture for people. It's not as easy as going on Fidelity, clicking a couple buttons and buying 10,000 shares of NEO, which Paul does on a daily basis. But Paul, give us in general, what is your just overall mindset on real estate and why you love it?
So I like real estate because it's a slow and steady way of building wealth, as much as I hate that term. Because when it comes to stocks, you're looking every single day what your money is. You look every single week, you're like, oh, stocks are here. Every single day, my stocks are here. I have 20,000 more. I have 20,000 less. I have 5,000 more. I have 5,000 less. Whatever the number is, people are always so It's the same reason why when you drive down the street and you see the police speed limit radar thing that automatically tells you your speed, what do?
I speed up. I certainly slow down.
Everyone hits the brake.
Yeah, sure.
Right? Mm-hmm. It's that immediate feedback loop, right? You see the speed limit thing, you hit the brakes immediately.
Did you say feedback? Did you mean?
I said feedback, didn't I? Did I say feedback?
Did you mean? Anyway, feedback. Keep going.
So, same thing with stocks, but different than real estate. There is no, a digital board on top of your house or on your rental properties that says your property today is worth this, and every day goes up and down. If it did, you would be a lot more emotional about it like you are about stocks. So real estate, it gives you the long-term aspect of investing, so therefore you make less emotional decisions. Does that mean no emotional decisions? Absolutely not. You're still gonna make emotional decisions, but when you own a property, when you buy a property, you like to know what it's worth, but you don't ever really know what it's worth because there's no Mr. Market telling you every second, it's worth this, it's worth this, it's worth this, like in stocks. There's no speed limit. We have speed limit signs that say speed limit is 35, but the second they put that digital thing that tells you exactly the speed you're going 37, what happens? You hit the brakes. Because it's an immediate feedback of what you're doing. So that's why I like real estate. I do think a lot of people do real estate the wrong way. People look at it as a way of living off the income as they build a portfolio. I do not agree with that. I believe you buy real estate and you keep the money in a separate account and you use it to buy more real estate or invest in your current properties to make them better and drive rents up. You should never, ever live off of your real estate income unless you have hundreds of units and you charge a management fee that generates you enough money to live off of.
That's probably not typical for most of our viewers or people getting started, Paul. So in general, when you want to get started, what are the initial steps? How much money do I need? How long should I learn from you about getting the terminology correct? What expectations do I have? This is a lot that goes into it.
Yeah. So it all depends on what area of the country you live in, but I think you need to have at least 25 grand to buy a $100,000 property, plus 10 grand on the side for the emergency stuff. I don't usually believe in emergency funds for investing, but for real estate, it's a little bit different because any given second, a roof, HVAC, anything can go wrong, and you want to make sure that you can cover that expense instead of worrying about collecting the rent or paying your mortgage. And Seth is smirking, so obviously somebody said something.
No. People are just asking. People are saying silly things like, "What is that artwork on the wall?" This is our studio. We haven't changed our studio in a couple of years, Paul. But I kind of want that lamp out of there moving forward because it doesn't look that good next year. I want to move that lamp. I do love that lamp, but anyway, I digress. So yeah, like 25 grand is a good starting number. I was looking at individual homes, some of which were $8,000. We've done analysis on this show. If you look back, we have a zillion videos on real estate analysis, looking at actual deals, going through real estate calculator. And I've looked at really dumpy homes for 8 grand. I've looked at homes that were 100 grand. And when we ran the numbers, a lot of times, I mean, like our stocks,
the numbers don't make sense.
The numbers, they don't make sense. And a lot of times it's a no buy for you, right? Like
because interest rates are so low, people bid up the prices of properties just like they do with stocks. Interest rates are so low, they get no money in their savings accounts, they buy stocks, et cetera, et cetera. It's a vicious cycle. Now, I will say, going back to the comment about living off your rental, the reason I realized this was the Cleveland apartment community is a very old apartment community in the sense of the owners are all old guys. I became friends with a lot of them. I never liked the properties where the owners lived off their real estate income. They were all dumpy properties. They didn't get the highest rents. They were terrible. And that's what made me go, okay, I need to start other businesses so I can live off the other money and not worry about my real estate money. We don't touch a single dollar of our real estate money for that reason. And we have major capital expense budgets every single year. In fact, I have no budget with anybody in my company as long as you're upgrading the property to increase rents, like doing kitchens, bathrooms, and other things that increase the rent of the property. There is an unlimited budget. Because my thought is, if I can invest $1 to make the property worth, let's call it $5 more, why would I ever stop that?
Yeah.
Ever. I would never do that. Even if I could invest $1 to make it worth $2 more, I'm still doubling my money because I'm also increasing my profit per year by like 15 cents per year. So if I do this over and over and over again, I'm getting a 15% return on that dollar. Where are you going to find it where you can invest in your own asset with such a secure investment where you're getting 15% return? I get pitched deals all the time, not in real estate, in other things. And people say, Paul, I can get you a guarantee, which is illegal to say, 8% return. And you know what I tell them? Guys, I can get a guaranteed return right now of 15 to 20% by investing back in my real estate. Why would I ever invest in you for 8%? It's a property you currently own and operate and know inside and out. So investing back in your property, even if I only made 10%, to me it's safer than putting in something that's unknown. That's the great thing about real estate. The other benefit of real estate is it's tangible, right? You can actually touch it, feel it, hold it, all that stuff, as opposed to stocks, you can't do that. It's sitting there, it's still gonna be worth something at some point. So there's a lot of benefits to it, and the biggest one, you can use leverage. You can use debt to increase your returns.
Scott's asking, do you like buying properties, renting out on Airbnb, or just renting it long term?
Airbnb is very saturated. We do not do Airbnb because we think the prices are too low and the quality is not what we're trying to give to our properties. We have 2 Mexican villas that we rent out. A lot of people in our neighborhood do Airbnb, and I think there's a sizable difference between the quality of our properties and the experience to those in the neighborhood, and you're gonna pay for that. If all you wanna do is have a view, go to one of those bad properties that haven't been updated in 25, 30 years, go do that. I choose not to be in that market. I just choose to sit there and say, listen, if my properties are top quality, if I'm renting for $1,500 a night and the same property but not in good condition is $500 a night, nobody's ever gonna go to me. They're gonna be like, hey, F you, I just want the view. Great, but we have better staff, we have the better food, we have We have hundreds of thousands of dollars just in artwork and furnishings in our houses, when other houses have 30-year-old furniture that they bought at a local store that's crappy. If your goal is purely cost, go to Airbnb. If that's all you want to do, go to Airbnb. I just choose not to do it.
Brody's saying you look like a Verizon phone salesman.
No. I'm not wearing some bright blue or orange shirt. This is a checkered shirt with a monogram on it, so suck it.
One of our patrons, Prajesh, asks, how do you select an area to buy a house for a first timer? This is difficult, Paul, because obviously you go to the less desirable areas, you'll get a smaller price, and that, along with that comes a certain tenants that would live in such areas. So what are your thoughts about areas? And the follow-up is, what's the best way to get site data on this stuff? This is a great question.
Get what?
Data on these sites or comps, all this.
So first off, the first thing I would do is I would never ask a realtor.
That's true, Paul.
By the way, one of our good friends in Mexico is now a realtor, and so it's kind of funny. But don't ask a realtor any of these questions.
Why is that,
Go do your
Paul?
own research. A realtor just wants you to. I remember the first time I talked to a realtor, they said to me, "Oh, you should be buying in blah 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 location." Well, I found out why. They had a listing of 200 units in that location, and that's why they said I should be buying in that location. Because I remember being like, "Man, what am I missing? I never even thought of that location." When you go, there's a healthy balance between area and crime and rent. There's an area in Cleveland called Shaker Heights. Shaker Heights is a nice east side suburb with some couple $1 million homes all the way down to $120,000 homes. They were trying to get me to buy houses there for $120K to rent out for $1,400. There's another area in Cleveland called Maple Heights. Now, Maple Heights has the reputation of not being as nice. I love Maple Heights, and here's why. I invested $45K into houses, and I get $1,100 in rent. Does everybody see the difference here? 3 times more money, $300 more in rent. And I went and told Shaker Heights, guys, not only that, your taxes are higher. I can buy 3 houses and get $3,300 versus the $1,400, and this one has less expenses because the taxes are lower. Why would I ever buy these? Somebody sit there and say appreciation rate. Fine, this will appreciate too. I'm buying for the cash flow. As the cash flow increases, the value will increase. Inflation will take itself over. Everyone in real estate says, what's the old cliche about real estate, Seth? What's the 3 words they repeat over and over?
Oh yeah, location. Thanks, Don. Location.
Mm-hmm. And guess what? If you believe this, you are stupid.
No, come on now. It's stupid. Misinformed,
aka stupid.
Go on.
So, I made Don laugh 3 or 4 times today, I think. This is pretty good. I'm on a roll.
Keep going.
Guys, it's about returns. If you're only buying based on location, like everybody else, you're going to overpay. Just hyped up locations are like hyped up stocks. When they say you want to own one Wall Street, how many people want to own one Wall Street? Everyone. Where do you think that price is going to be? Is it going to be low or high? If everybody wants it, demand increases, supply is the same, what happens to the price?
Obviously very high.
Yes. As Nate, our college intern, is saying, up there. I look for the ones that have a good return, that are less desirable, but I can be the best in the street. When you go pay through the nose for one Wall Street, you don't have extra money to go invest back in the property. What are you going to do with that? Here, on the Maple Heights property, I have marble backsplash. I have granite countertops. I have the most beautiful properties on the street, and I'm going to win. I'm going to get $1,100 when the neighbor's getting $850. That's my goal. Now, granted, Maple Heights now, you can't even buy a house for less than $60,000 that needs $30,000 in work. I bought these houses in the downturn when everyone said it was terrible to buy real estate. Real estate in Cleveland's toxic. I was buying homes for an average of $8K to $10K, putting $30K into them and getting $925 in rent. And now those same properties get $1,100 in rent. So I'm into them for $40,000 to $50,000, and I get $1,100 in rent.
Go back to your thoughts about realtors. This is somewhat new. I think everyone thinks you're supposed to trust realtors, what they say. They have your best interest in mind.
Realtors are salespeople. That's all they are. They're like a stockbroker. They are salespeople. More power to them. Go earn your keep. But just because you sell a car doesn't mean you know how a car works. Doesn't mean you can fix a car. So just because a realtor sells real estate doesn't mean they know real estate. Doesn't mean they know investing. They just know how to sell something. More power to them. More power to them. But your job as an investor is to understand, if I went to a realtor right now and said, guys, let me tell you a great story, but it's about a bank though.
It's okay, go ahead.
Are you familiar with Rocky River, Seth? Of course you are.
Yes, I am. My 100-year-old uncle lived there.
Okay, versus Maple Heights, right?
I don't know that place well, but keep
Maple
going.
Heights is the one I just talked about.
Rocky River's nice, right?
Rocky River's nice. I once had a meeting with a bank. I told them I was looking at 2 properties. I bought 2 properties, one in Rocky River and one in Maple Heights. The banker, without hesitation, I didn't say a single thing as, oh, wow, you're going to do awesome on this one. Guess what? I made 3 times more money on this one. Literally 3 times more money than the Rocky River one. He, as a banker, just like a realtor, is a salesperson. They want to give me a loan on Rocky River because it's desirable. They can look at their bank and say, hey, look, we have a nice property in Rocky River. This one is, ooh, it's Maple Heights, declining population. The schools aren't good. People are still living here. They still want a good product. Everybody thinks this one does well. My properties in Columbus are not in a good area. And my returns are 50, 60, 70% a year. And the guys in Dublin and all the nice areas are making at best 10 or 12% a year. Which one would you rather have, 50, 60% in a less desirable area or 10%? If you listen to a realtor, you're going to get 10% at best because they're going to push you towards the more expensive property because they make more money when they sell a more expensive property than they do when they sell a cheaper one. So that's why you can't trust realtors. Bankers the same way. Bankers don't understand investing. They are probably dumber than realtors because they should understand it. They control the money. Follow yourself in your investment. Just realize they're not going to give you as much money for this, and that's why you can get a better price on this. Because the less debt they're going to give you, the lower your return is going to be. So you have to increase, you have to get a lower price to make up for it. Versus here, don't go where everybody wants to go. If you want to go where everybody wants to go, then you're just a lemming, and guess where they're going to go over?
Over the ledge.
Here's the lemmings. Ready? Here's the cliff.
You like drawing this picture, Paul.
I didn't know what a lemming looks like. What does a lemming look like?
I think it's some sort of monkey or squirrel.
Let's go like this. You know what people.
As you can see, Paul is very fired up about real estate, Paul. We talked about real estate for a long, long time prior to talking about stocks. This is your dream child.
The question we have is, how did a lemming go off the cliff and explode and have smoke up?
Fire. Yeah, it's a movie, Lemming.
It really made no sense.
I have some questions. Benjamin, one of our patrons, I'm thinking about house hacking as...
What's house hacking?
I don't know, as my first real estate investment, hoping to buy a duplex and live on one side of it. You must love that idea.
I mean, yeah, I think it's a great way. I mean, just... So Graham Stephan did this. Okay. Graham Stephan. Great. I mean, listen, it's just a matter of doing numbers. I think it's a great idea.
Goldie asks, this is a great way to get my attention. Goldie did it. She just said, Seth, can you ask Paul, thinking about buying a holiday home, 6 months for me in the winter, 6 months in the summer to rent as my retirement plan in Spain. You can certainly have a visit.
I like Spain.
Espanol. Looking for a golf course. Now, is this near Barcelona, Paul?
Bathroom.
Looking at a golf course property. So what do you think about like a summer home? You know, I have land on Put in Bay in Ohio on an island. Very nice spot for vacationing. And you and I have discussed putting land on it, maybe Airbnb it out. What are your thoughts on this? Summer homes or winter homes?
Asking me that question is like saying, Paul, would you like to buy a car?
Would you? Yes.
The right car, the right price, at the right time, of course I'll buy the car.
I see.
Every investment is good or bad based on how much you pay for it. Let me give you an example. Two properties, A and B. Property A has revenue of $100. Property B has revenue of $200. Property A has net income of 10. Property B has net income of 15. Which one's a better investment? I'm asking Seth, which one's a better investment? Answer is, you don't know enough. If you paid $50 for this one and $500 for this one, which one's a better investment? A, you're making 10 on 50 versus 15 on 500.
I see.
Switch it the other way around. Which one's a better investment? 10 on 500 or 15 on 50?
15 on 50.
Thank you. So the whole point is here, what changed in all of this? All that changed was the price. Everything is about the price you pay for the value you get. What's the income you're going to generate in the future on this property based on what you pay? You asking me, should I buy a home in Spain? A home in Spain is like sitting there saying to me, would you like to buy a car? Well, what kind of car? Well, a Ferrari. What kind of Ferrari? Enzo. How much? 100,000. Yes.
Well, speaking about cars, I want you to give our viewers one more shot at the giveaway we're doing this year. But Hunter stopped by and said he's not interested about real estate at the moment, but he had to give Uncle Paul a tickle, which it reminds me, for 90 of you watching and only 32 tickles of that thumbs up, we need more laughter and tickles on Paul with that very effeminate
I'll go like
shirt.
that. That's a Pillsbury Doughboy.
Yes, the doughboy.
I got set to laugh again. That's set down to laugh again.
Yeah, so Hunter, we welcome you in. Paul, spoil something. Speaking about cars,
Guys,
talk about this. If you haven't caught this as patrons, go ahead, Paul.
Mr. Beast years ago gave away 1,000,000 pennies, $10,000 when he hit 1,000,000 subscribers.
That's right.
Before I heard about this, I said I want to do a big giveaway. We were giving away 2 Tesla Model 3s, one at the end of the year and one when we hit 100,000 subscribers. Whichever one happens first, we'll do first, etc.
Yes.
So we hit 100,000 subscribers in 5 months. Don's working on the logistics with my brother, who runs the company. We're giving away 2 Tesla Model 3s. We are only giving it to those who support us through our website and app. That's what I'm gonna go ahead and say, even Patreon. But if you see the value in what we're doing and you want access to our 8 Pillars website, you can get it for $8 a month here. When it comes out, I'm actually thinking about making it $30 a month.
$30?
When it comes out. So do it now. If you pay $8 a month right now on Patreon,
You're in.
You're in. You get the app for free when it's ready, April 1st. I'm calling April 1st the date.
Great. That's
April 15th. April 15th, tax day is the day.
Great.
You'll get that, and you're entered to win a Tesla Model 3.
With that said, folks, is along with our 8-pillar analysis of stocks, you will get in the future. You will get the real estate calculator that we've used on this show to analyze deals, and it's incredible, Paul. It brings up all the ins and outs about looking at a house. I have looked at some homes. We run them through RE Calc and have realized that they may very well be bad deals at certain prices, and so it's very interesting.
Phoenix said he wrote, Paul will be buying Spain for one lucky subscriber. Stay tuned.
That will be.
Spain's probably pretty cheap right now.
Andrew brought up an idea about locations, and I've said this too, and I'm sure this is what Andrew says. Won't you get better tenants in nicer areas with less headaches?
And that's absolutely. And you have to decide what's more important. What's more important to you? At some point, there's a factor. Let's say in a nice area. This is a great question. Let's say in a nice area with nice tenants and less hassle, you're going to make 10% a year. Not bad. To me, if I can invest in stocks over long periods of time and get 10% versus doing a lot of work for real estate, I'd rather just do stocks. But let's say 10%. At what point would you rather just deal with the hassle? Is it 11%? Is it 12%? Is it 15%? Is it 20%? Is it 30%? I don't know what number that is. You have to decide that. For me and our properties, we get well over 30% in our money. My properties in Mexico that are paid off in cash make me 15 to 20% a year. I will deal with that all. When people tell me, oh, Mexico's so dangerous, great. Keep thinking that because I just buy properties cheap down there. That's the question you have to ask yourself. This is your no hassle return. What is your hassle return?
Oh, that's interesting, Paul.
Well, that's the way you should look at all investments.
Yeah, well.
What are you willing to have a hassle for with a less desirable area to make more return? I have chosen for me, it's about 20% or more. If I can make 20% or more for the hassle, I will do it. Because this difference right here is worth a lot of money over a 30-year period of time. That difference right there is hundreds of millions of dollars if you start with a couple $1,000,000 bucks. I'd rather do that then. That's my opinion.
Paul, when are you going to write a book?
You know,
you had one. You have hundreds of thousands of pages or
no,
words
I have
written.
37,000 words complete.
What's it about?
Getting crap done. I can't say the actual title because it's a curse word.
Okay.
But, you know, I didn't have the passion for it. It was like, I did it and it was great. And I'm sure something will happen on the road, but I'm only 39. Let me do some more things. And then when I'm 50, maybe I'll think about it.
Vbo, if you want to share this, guys, if you have a friend that might want to hear this, you can go underneath the video on YouTube and just click that little share button. You can email the link to somebody and they can jump on. We appreciate the interest, guys. You guys are incredible. I see a lot of people that don't talk about closing costs. Zubin asked that there are some costs associated with homes that you need to make normal people aware of, right?
Yeah, I don't really worry about. I worry about them in the sense of when I look at an investment, I'm looking at the acquisition plus all costs. The purchase price, closing costs, and then rehab costs. That's my investment. That's your total investment. Got it? There could be no rehab costs. You can get the seller to pay your closing costs. Whatever it is, you can manipulate all the down below, but you add them all together. That's your total investment. Now, granted, when you go to a bank, then you subtract out the debt, and that's your actual investment. So let's say you buy a property for $10. You have $2 in closing costs and $5 in rehab costs. That's $17 total. Let's say the bank gives you a loan for $13. Your investment is now $4 of your actual money because the bank is letting you borrow $13 of it. Does that make sense?
Yeah.
So you have to all your calculations are returned based on your actual what check you wrote, how much money you spent out of your own pocket that you did not get back in a loan.
Paul, do you buy homes from auctions?
Nope.
No?
So many people there. I have no competitive advantage in an auction.
I've gone to one.
I've gone to several.
Yeah. In fact, yeah. Okay. Let's keep going. What are some of the common hassles you'll have to deal with from tenants?
Everybody always said to me when I became landlord, Paul, these people are going to call you at 2 o'clock in the morning with their drain clogged. Can I ask you a question, guys? Who the F is clogging their drain at 2 o'clock in the morning? At one point I had 1,000 units. In all my years of having 1,000 units, that's 15 years of it, I got one phone call in the middle of the night from something, and I immediately asked the person to move out because it was Christmas Eve. They told me their roof had caved in. She said, I have a friend who can come over and fix it. The friend of hers, I didn't even know the guy, called me later that day and said, yeah, she was exaggerating. There was literally a drip from the ceiling, and that was it. And I called her up and I said, it was the last straw for me. I'm like, you're a problem tenant, you're out. I'm like, I'm not renewing your lease in a month when it's due. And she's like, come on. I'm like, nope. You called me at 2 a.m. on Christmas Eve to tell me this thing. It doesn't happen, guys. And guess what? If you have a lot of units, just be upfront with your tenants. Guys, when people call us for emergencies now, if it's not a unlivable condition right then and there, it doesn't get handled immediately. You have to be aware of showing people that stuff. Like, oh, I'm sorry, your faucet doesn't work. There's another faucet in the apartment. You can live without a faucet. Now, if it's, hey, my window exploded and it's middle of winter and okay, that's a different story. But it doesn't happen either.
Hunter Smith has asked some great question. Hunter, if you're not a patron, please jump on because I'd love to be friends with you. You're hilarious. He said, when we have the wrestling match, maybe it could be you and Mo versus me and my sons. Now, my sons are little babies.
I'm not going to hurt your sons.
But what about the wrestling match is me versus you and Mo? That would be, now that might level the playing field a bit.
Mo's a pretty built guy.
But that would make up for, it might get more interesting, me versus two people, Paul. You have to pin me and I have to pin both of you.
How are you going to pin both of us?
Well, one at a time.
I'm faster than hell.
How do you eat an elephant? One bite at a time, Paul. You know that. All right, guys. What about REITs, Paul? And again, REITs come up when we're talking about stocks. What are those? Can you explain what the thing is?
Real estate investment trust is a REIT.
What is that?
By the way, if anybody says REIT, I'm going to kill you. I knew one guy who ever said REIT. They're just basically a traded stock that buys real estate. They have certain tax rules. Like they have to pay out 90% of their net income after taxes to their shareholders every year. But the thing about REITs is there's depreciation in there. What is depreciation? It's a non-cash expense. If you buy a building for $1 million, every year the IRS lets you deduct about $33,000 a year from your income for nothing. You didn't spend any money, they just got you to deduct it. That's an expense. So REITs have this good expense here, which is awesome, but then you look at it saying, oh my God, they lost, let's say they made $50,000 that year before the expense. Oh, they only made $17,000. No, they made $50,000. They just had a tax write-off here. And it also alters their books because now their property, when you write off the $33,000, now their property on their books shows a value of $967,000. I mean, the property could very well be worth $1,030,000 because it went up 3%. You know what I mean? So so you have to understand your numbers on the REITs. They pay a very high dividend, which is awesome. They do pay a great dividend. Again, look at their free cash flow and make sure they can support it and make sure the REIT isn't something that you really like or understand.
Guys, you have such great questions coming in. Zubin's asking, what about turnkey properties, Paul?
Turnkey is kind of like the nicer properties. I prefer to buy properties that I have to put more money into, but turnkey properties work. You're just going to get less return. The more work you have to do, the more return you're going to get because less people are going to want to do it because more people want turnkey. You got to remember, my mindset is, let me do what everybody else does not want to do.
Yeah.
Whenever I talk to a realtor, we met with that realtor in Mexico.
Yeah.
Right?
Paul, I look at all realtors so differently now when I've learned what you've sort of taught me.
But did you hear what he was saying? I literally said to him, I want X, Y, and Z. He goes, okay, I understand. So what about this? And he mentions A, B, and C. And Seth got mad at me because I go,
No. It happened over a course of time, but
it was like repeated over and over. And finally I go, what was his name again?
Well,
Carlos?
I don't know.
Oscar, I want X, Y, and Z. And Seth was like, okay, Paul.
I mean, because Paul's just not afraid to like completely embarrass a grown man and be like, are you an idiot? This is what I want.
I said it to him how many times, though?
3 or 4 times, yeah.
I literally said it to him 3 or 4 times. Finally, I go, Oscar, I want this. He goes, oh, okay.
Got it. Yeah, I mean...
I remember you go, oh, Paul.
It's crazy. All right, let's keep going, guys.
Listen, he's wasting my time.
Yeah.
I'm speaking and he's not even listening.
So Jacob asked, what about people living in countries where houses are expensive, let alone countries? What about areas? If you're living in LA, Austin, New York, I mean, what?
Your entire play is going to be appreciation. And if you're okay with that, more power to you. I prefer cash flow to be the way I make money, and appreciation's cream on top. In other markets like LA and expensive markets, you need the appreciation because you have no cash flow. And that's why those crashes are much bigger than ours. Because those crashes, because people, all of a sudden the properties aren't going up in value, then what do? You all of a sudden lose your job, your property's not going up in value, you have to pay, and you have to just out every money every month, you're gonna lose your property. That's why those areas that have big growth have big falls. Just like everything else we talk about, just like stocks and everything.
Alkali, one of our patrons, is asking, are REITs a good alternate if you can't buy a rental property for the time being? Interesting.
Yeah, maybe. You don't get the tax benefits of owning the real estate.
Don, you're getting shout outs for the great thumbnails. Yes, we certainly know that our rise to stardom, immense stardom and popularity, is driven a lot by Don's amazing thumbnails and my handsomeness. We'll
Look at Matt Jensen. He caught the screenshot of me.
Oh, wow. That's great, Paul.
Look at this, guys.
Yeah. That's your O face. Paul, do you have any REITs?
I look like a little person here.
Do you have any REITs, Paul?
I said that. Don's laughing again. I have no REITs.
What is a turnkey property?
A turnkey property is just one you buy and immediately you're renting it out. It's just turnkey. It's ready to go. Turnkey. You can move right in, essentially.
Thanks, guys. You're doing great. Don, do you see any questions that I'm missing? Real estate? Oh.
First-time home buyers, not people who are buying investment property, first-time home buyers. If it's your first time buying a home, be cautious on your price because someday you'll want to move and afford a better house. So don't go paying top dollar. Wait until you find the house you want to live in for the rest of your life before you overpay.
Yeah, I mean,
if like Seth was buying a house and I said, Seth, could you see yourself living in this house forever? He's like, absolutely. I go, then if you have to overpay, then overpay.
Yeah.
Because you're going to live in it forever. Who cares? But if it's your first home, you got to get a good deal because you'll want to sell it in 4 years or 3 years or 5 years, and you're going to regret when you overpaid and can't make money.
It's definitely overpriced now. In fact, my sister bought a home. And
she's in Dayton.
Yeah, she's in Dayton, Ohio, and she looked at the home, and the home got 5 offers that day, and they had to make they made an offer, made an over ask offer. I don't know if people quite understand that if you overpay on a house in September, and then there's a correction in the market, and your house drops by $50,000-$60,000, if you're looking to move, and you're now underwater, right?
You're upset. Now the theory behind it is your next house you're upgrading to is probably a lot cheaper too, so you save that way. Like look at the house I just bought, right? I spent more than I would have spent, but I still got a good deal on it. But I thought to myself, if I don't buy this house, I'm probably going to spend 50% more or 60% more building a house in a few years, so I was okay with that.
RJ, you might need to expand your question. Someone says, how do you feel about doing business or renting to family? RJ, you might have to expand that. I don't know what that means.
Oh, like renting to your own family?
I don't know, maybe?
Yeah, I wouldn't do it. In fact, I didn't like to rent to friends. I don't rent to friends. I don't rent to friends of friends. Any of that stuff. I just don't like doing it because at the end of the day, somebody's gonna feel like they got the shaft on that end of the deal.
So, how many units do you currently have right now, Paul? And how much?
Right now, a little over 600.
And then how much money do you have sort of banked up, ready to buy units if there's a huge correction?
A lot.
Millions, multi-millions of dollars.
Yeah, a lot.
Tens of millions.
I mean, the other thing is we have investors now that we've been working on. So we have 300 families around the country who would invest with us in deals. Like if we wanted to buy a $100 million property, we could with the investor money.
And what does Andrew do for you? Maybe just
Andrew doesn't do anything.
Nothing at all anymore?
No, Andrew, he's working on a few businesses. He's looking for more luxury rentals for luxury escapes. He's going to Fiji soon. We talked about the Caribbean, Dominican. We talked about Costa Rica, etc.
But he also looks at deals almost all day, right, for houses.
We haven't done that in a while.
Because everything's just overpriced?
Correct.
Yeah.
Yep.
Go ahead, Nate.
Nate's got a question.
Go ahead, Nate. Oh, yeah.
Great. Okay, this is a great story.
Everybody wants to know how you got into all this.
Did everybody want to know, or just Nate said it? And
That's me and Nate, so that's everybody.
Okay. So I got into real estate. I was always into stocks when I was 13, 14, all the way up. Once I was home from Christmas break or something, and I was with my dad at a restaurant, and his neighbor was at a table or two away. So he came and said hi. So he's like, "What are you doing?" I said, "Oh, I'm doing investing stuff." He's like, "Oh," and he's a well-to-do guy. He goes, "Listen, I'm gonna tell you something." I go, "What's that?" He said, "Any rich person you meet, I guarantee they'll have one asset. They all have one asset in common: real estate." He's like, "Stock people will have real estate. Real estate people won't necessarily have stocks." He goes, "Real estate is how you build wealth long term." That stuck with me. Now, I went home that day, bought a book called Real Estate Riches. It's part of the Rich Dad Poor Dad series. It's by some guy named like Rolf or something like that, some Dutch guy or something like that. I read it. It immediately clicked with me. Like immediately, I was like, "Yep, this is the way I want to do it." That's how I got started into real estate. I started buying, 2 or 3 families in Toledo, and I lived in Toledo for a year. Then finally, just started doing it for my family on a large scale in Cleveland, and I've loved it ever since. Now we have Cleveland and Columbus and international.
How do you pick a good property management company? This is crazy.
Property management companies are absolutely terrible. You probably think, "Boy, this guy's negative." Guys, I've been through the gamut. Just think about it. Nobody's going to manage your money the way they do. In fact, if somebody looks at you and says, "I manage your money the way you do," you run away immediately. The worst property managers in the world I have are the ones that said that to me. Manage your own properties. It's also hard to be a third-party manager because you're not in the weeds, so you don't know what's going on with the property, and you're going to expect a certain return every month. That's not the way real estate works. Real estate works in fluctuations over the year. One month you have more expense, one month you have taxes, etc. You have to look at the whole year. So manage your own properties. If you can't manage your own properties, partner with somebody who can manage it for you, who invests some money with you.
How long can this rise in the housing market?
No clue.
No clue, right?
I have no idea. Nor do I care.
What about when people say they do have a clue about when this is all coming?
Great, they're
down?
lying. Next.
What do you do if you have squatters, Paul? I know you have squatters in your home right now. You haven't been upstairs in 6 months. So what do you do when you have squatters?
I think every state's different. We've never had an issue with squatters.
No?
I mean, when we buy an empty property, sometimes there's a squatter here or there, but you take a gun to their head, you pull a trigger every once in a while, and before you know it, they're out.
Mm-hmm. Okay.
You get them a new apartment 6 feet under.
Okay.
Jason Bourne.
Make sure you smash that like or dislike.
if you like killing squatters. By the way, I don't really do that.
You buy tax deeds?
Nope.
What are those?
Basically, somebody forecloses, somebody loses their property because somebody has behind on their taxes. You go, you buy their tax certificate. Eventually, they owe you the money, and it's a huge return because you're buying it for a discount or you get their property. It's a good Carlton Sheets, what's it called? Infomercial stuff. It doesn't really, I mean, I haven't seen it work very well because there's big companies that buy those things in droves.
Ayrton, one of our patrons from Peru, says people are bringing up, what about a 1-unit giveaway to as a YouTube prize in the future? I think we talked about that, Paul.
We talked about doing like an actual Mexico house giveaway.
A whole house or just a week?
A whole house.
Come on. Are you serious?
Listen, guys, I'm a value investor. I have 10,300 subscribers right now.
Okay.
I know how much I make from those 10,300 subscribers. True. If I had 1 million, if I knew that giving away a house in Mexico would magnify this by 100, can I get to 100? I'd do it all day. The question is, will that happen?
Mm-hmm.
That's the question. I would do it all day long. Here's a house. There you go. There's your house.
I would imagine like the people who are trying to become YouTube stars, we've talked about this, Paul, is usually giveaways are very difficult because you're not generating the income.
Oh, we don't need that.
Well, that's why are you
guys? I'm going to lose money again this year.
Why are you nuts enough to give away 2 Teslas?
Because I'm in it for the long haul. I know what this is going to make us over long periods of time. And by the way, when I say make me, because are you guys still making your income even when I lose money?
Yes.
That's why I sit there and say it's me, because they're still going to get paid. I won't make money this year because of the Tesla giveaway. I'm okay with that. I'm investing how much money into this Everything Money app. I'm okay with that. That app is going to cost me how much money? It's going to cost me almost 100 grand to do, plus 30,000 a year just for the data, plus another $30,000 a year for the developer. So I have a $60,000 a year commitment for this application. But I know those numbers. If I have 10,000 subscribers now and I want to get to 1 million, that's 100 times. If I can make 100 times what we're doing today,
yeah,
you know what we're going to do this month.
Yes.
Multiply it by 100 times. Would I give a house in Mexico away if I knew for sure that was going to happen?
Yes.
I would do it without it blinking an eye. I'd be like, there you go. The question is, will that happen? That's where the risk comes into play. Now, what I would probably do is, on a house in Mexico giveaway, it'd be a minimum number of entries would have to happen. I'd have to have some sort of minimum. I'd be like, listen, I'm not doing this unless, and if it's anything less, I give away like a car again, like a Ferrari.
Yeah, if you guys are wondering what these Mexico homes Paul's talking about, just open up a new tab in your browser there and look at luxuryzlo.com, and you will see all the beautiful homes that I've documented with photos and videos down there. And these are incredible homes you can rent out from Paul. And yeah, we were just there, Paul, and we yeah. So Paul, someone said, how do I get started? What are the best steps to get started? And you what about? Tell me what these are. I pull up on an off ramp in Ohio, and on the side there's a sign that says "We buy houses." What are those, and what are these people doing?
Yeah, we had a van a while back where we talked about that. We got a few deals from it. Those are people who just basically say, "Listen, do you want to sell your house fast?" They're going to give you a low offer, which they should if you want to sell your house fast. The most frustrating thing as an investor is when somebody says to you, "I need out tomorrow." What do you think your house is worth? Well, I just saw a realtor told me it'd be worth $100,000. Well, how much do you want for it? Oh, $100,000. It's like, no. If you want it sold tomorrow without any effort, you're gonna get a lot lower price. It's like the show Pawn Stars. They go in there and they say, oh, this thing is worth 20 grand. Cool, how much you want for it? 20 grand? No, I gotta make money too. So that's the big thing. We buy houses. Their goal is to buy a house from you very, very cheap, but they'll close very, very quickly. Anybody who is out there watching right now, if you have a property that you wanna sell fast, call me. I'm the fastest buyer you'll ever see in your life. I will get your property bought so quickly, it'll make you spin. But it's gonna be a good price for me, not for you. But that should happen because you want a quick sale. You're getting paid by being paid quick.
Other people are saying it would be nice to give away just a top tier giveaway just to get into the patron.
What do you mean?
Someone who might not be able to currently afford the top tier level to get full access to, it might be interesting to just give one of those away as a
but
prize
the thing
winner.
is on that one, I want the top tier to be for people who are willing to pay it, because the big thing is when you pay for something, you value it more. And I'm not saying you're not going to value it, but I want people in there that are really committed to engaging and talking. And the more you pay for it, the more willing you're going to be willing to engage and talk. If I give it away to you, then, and by the way, I'm not opposed to it, but that's my concerns when I go forward with that stuff.
What about multifamily apartments? I mean, what would you suggest a normal first timer get into? Like a duplex, a quad, or do you go crazy?
I mean, buy as much as you can when you start. That's what took me from 2 or 3 units to 63 units. Somebody told me, Paul, you can afford 100 units. Go buy 100 units. You're gonna make more money, and it's gonna be less hassle. The thing about real estate that's interesting is the more units you have, the easier it becomes. That's a very, 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 very unknown fact. The more units you have, the easier it becomes.
Is it wise to start off renting to university students, Rolando asks?
I do not like renting university students, and here is why. Everyone pays through the nose for university housing.
Yes.
Universities are going to start sucking when it comes to money soon. So I get concerned that universities will sit there and say, hey guys, remember how we only required you to live on campus for a year? Well, we just built 1,000 units right there. You're now required to live here till your junior year. What are you going to do if you just paid through the nose for that house for the students to live in?
That never crossed my mind.
Oh, to me, the risk is not worth the reward.
I see.
That's my opinion. I've been wrong for 10 years on this one. I don't care. I will not touch university housing. I will not touch it. Because all it takes is one university saying, all students are required to live on campus for the first 3 years, and you are screwed. Because guess what? You paid $1 million for that 2-family on Ohio State's main campus, and when you have to rent it out, you're going to get $2,000 a month, and it's a dive. It's a crap property. You are going to go under.
Other real estate folks say you can start going using other people's money and have no actual out-of-pocket costs. Is that a pipe dream or?
It's possible, but if you have no experience and you want to talk to friends about giving you money, how are you going to pitch that? If I talked to you right now and said, hey, give me money to do a real estate deal, Seth, would you give it to me?
Give it to you?
Yeah. That's a trick question.
I don't know. No?
Why wouldn't you give it to me?
I have no idea. Because you're just starting out, you're saying.
No, if I'm like me right now.
Oh, yes.
Yeah,
yes,
of course
I would.
You would.
Yes,
Why?
of course. Because your experience been doing this
I have
for
a track
20 years.
record, everything.
I don't. So
yeah, if Nate said to you, hey, Seth, give me 20 grand, what would you do?
Of course.
You'd be like, Nate, I like you, buddy, but not going to happen. No offense to you, Nate.
Anders is asking, is it possible to just switch tiers and then go up and down different months? I think that's possible.
That's a Don and Patreon question. You guys have the option. Ask Patreon. That's why you pay Patreon a huge chunk of our revenue so they can handle those questions.
We don't manage any of that.
Yeah, we don't manage any of that. They charge us a big percentage. They charge us 20%.
Wow. Spencer says, what if I can only afford to buy a studio or small apartment? Do you think it's worth it to get into the market? I know where you're going with this. Go ahead.
What am I going to say?
At what price?
Thank you.
Yeah.
It all depends on the returns you think you're going to make.
Well,
15%, guys. If it's $1 million, if it's 100,000, or if it's $1 billion, it's still 15%.
yes.
That's your goal. This is your goal. Whatever money you're going to put into it, you're going to put into it. The goal is what percentage you're going to make. That's what matters.
Folks, if you haven't subscribed, we obviously advise you to do so. We've done a zillion videos on this. We've looked at actual homes. We've walked through homes and narrated what Paul does to them, what he's looking for, some expectations and mindset. Paul, in reality, so I'm saying, guys, if you do a little research on your end underneath in our YouTube channel, you'll find what we're talking about. But I'd like to get down to this, Paul. When it's all said and done, is what can real estate do for a normal person in their life?
Let's
What kind
do
of
this.
expectations can we have?
Let's say you invest $25K a year into real estate
Is that
at the age of 30.
okay?
You do that for 30 years. Nope, let's do it for 35 years, to the age of 65. So 35 years, right? And let's say you're able to make 15% a year, which, by the way, you should be able to make 15% a year. So here's our lovely equation.
So this is a total investment of $700,000.
35 years.
Oh, did I do it wrong?
Yeah, you did it
35
wrong.
times $25,000. Thanks, Paul. This is $875,000 total invested.
This is the equation. I just want to do that to show off how smart I am. Well, because everybody else is like, oh, I put it in. So this is what you're going to have in 35 years. Are you ready,
Go
Seth?
on. This is at a desirable 15% return, which is what you always want.
Yep. Well, minimum of what I want.
Minimum, yes.
$22 million.
Off us $875,000
Off of
total.
25 grand a year. Don't look at the total amount you've invested. 25,000 a year for 35 years. I guess you should look at it as 875 because 875 today is way better than 875 over 35 years. $22 million for 35 years.
Can you explain this equation we're looking at?
So what this is it's the future value of an annuity. The annuity is $25,000 a year. You're making 15% a year for 35 years. The equation comes to $22 million a year. That's pre-tax. But the great thing about real estate is you have tax benefits, and when you sell a property, as long as you buy another property like it, you have to pay taxes on the previous gain. It's called a 1031 exchange. There are certain rules for it, but $22 million based on $25,000 a year for 35 years. So our good intern here, Nate, is 20 years old. When he's 25 years old, he can figure out a way to invest 25 grand. By the time he's 60, he'll be worth over $20 million. Does that sound good to anybody?
Sounds good. Christopher's just simply...
Can I make another comment?
Go on.
What if you buy those sexy properties that make 10% a year? Yes, you'll have less hassle. You'll have a lot less hassle.
Oh, this is interesting.
A lot less hassle.
Dead air on a show is really popular.
Instead,
Uh-oh.
6.8 million. So you have to ask yourself a question. Is more hassle worth $16 million more? 15 versus 10% return. You decide.
You have to decide.
You have to decide.
This hassle could include time away from
I'm
your
wealthy,
family on Saturdays.
and that's not worth it. That's not worth. I'd rather do this one. Mm-hmm. And I've got money, so you better believe you have 25 grand a year, and your goal is to make 10%. I mean, you're way richer than I am. I mean, that's just all to say. I don't get that. That's what 5% a year over 35 years does in difference in value. Somebody's watching this right now going, no way. Yes way. Yes effing way.
Dennis asks, when you buy your first real estate, it's a good idea to get a loan for the money.
Well, of
or
course.
pay cash.
No, loan is leverage. It allows. Let's do the math on that one. Ready?
Well, that's important, Paul. It's
Let's
not
do the
always,
math.
of course, for everybody. Go ahead.
Let's do the math. $100,000 property. Okay. The profit is $8,000 per year. Okay. Now, if you paid cash for it, what is your return? 8,000 divided by 100,000, 8%. Is that correct?
Yeah.
Correct. Now, when you borrow the money, Let's say you borrow $75,000. Your mortgage payment on $75,000 is how much? Let's call it interest rate of 4%. So you borrowed $75,000 times 4%. That is $3,000. Okay? You brought in $8,000 in profit, less your $3,000. You now make $5,000.
Yeah.
Now every moron out there will say, well, Paul, look, I make $5,000 here, I made $8,000 here. This is better than this. Right. But $5,000 is now based on you borrowed 75 of the 100, so you only invested 25,000.
Yes, 25 grand down for your down payment. You took a loan out for 75. 20% return.
20% return versus 8%. Which one would you rather have?
Mm-hmm.
Now, I had a friend of mine whose dad had 100 homes in Detroit. He said, Paul, I like sleeping at night. I prefer to do this. Great. I prefer to sleep with literally pillows and beds made of money.
Yes.
That's what I'd rather do. But that's your decision.
I've seen
if it's
count.
emotional and you don't want to have to deal with a mortgage payment, great. More power to you. Enjoy this. Put half down payment. Half is fine. You're going to increase your return from 8 to 14, 13% by doing half.
This is your idea of smart debt.
Yes.
And it takes some mindset and brainwashing to get over the idea that debt is bad, Paul.
Correct.
Would you like to go
let's
into
do the
that?
math here.
Sure.
8% versus 20%. Let's do this math over long periods of time. Oh boy, this is going to blow your mind. So 25K at 8% for 35 years versus 25K at 20%
Oh boy.
at 35 years. Seth, speak while I do the math here.
We welcome you all in. 135 of you watching. I would say, in general, we're still astonished every single week to get more and more of you here. So I'd like to give a very heartfelt thank you. This show has become just a phenomenal presence in Paul and I's life. We went for a year and a half, almost two, just talking to ourselves. We got our first 1,000 subscribers at the end of September, and here we are, well over 10,000 in January. And it's because of you guys watching. We really appreciate it. You've transformed our lives, and I think the power of this show and Paul's knowledge is spreading to a lot of people. The positivity we're getting on all these comments is incredible, and it's just great. So we appreciate. Yeah, go ahead, Paul. Regroup. So that's my thank you to all of you. I appreciate
4.3 million versus $74 million. This is just math, guys. When people say this isn't true, this is why Warren Buffett made so much money for so many people. He did about 20% returns when the market did about 10%. $74 million versus $4 million. Over a 35-year period. If you are so rich that $70 million doesn't matter to you, can I borrow your money, please? I mean, that's insane. Take some debt on there. Don't be stupid. Instead of being a wuss, be smarter about your investment. Learn how to buy the right investment. Don't sit there and hedge by not putting debt on there. Hedge by being a better investor. That's it. If you're a better investor, you will make this. This seems unreasonable, doesn't it? It's $25,000 a year. At 20%, the math is this. To the 35 minus 1 divided by 0.2. This is the equation. This is the equation. Anybody can run it right now. It is $74 million. Let me make sure I did it right just to be safe.
That's a good idea.
1.2 to the 35 minus 1 divided by 0.2 times 25,000. $73.7 million.
Look at that.
It's crazy. Now you have to pay taxes on it. Oh, boo-hoo-hoo. You have to pay taxes here, too.
Yes.
And just, come on.
At what point is your Dads with Purpose, who...
he's been commenting a lot lately.
He is an enormous fan of ours, and we welcome you in. In fact, I should follow along in his channel.
By the way, guys, that really is Seth and I answering these messages. Like, some people, like, somebody once commented to me, I wrote back and said PG. They said, hey, can you ask Paul this? I'm like, it is me. I was like, that is me right now.
It is us entering your questions and comments on there. At what point does your loan no longer become important and you self-fund, or is it always leverage?
I don't care when I'm a billionaire, I'm going to take loans on all my real estate.
The same thing for your own home right now, which
guys,
you can pay for out of cash.
Yeah, I mean, I have debt on my current house.
Yes.
I can borrow at 2.75% of my current house. Why in God's name would I not have a mortgage?
Well, this goes back, folks. If you're still new to investing or We've done multiple videos on how we're not in agreement with Dave Ramsey about paying off your house early and that using that low interest smart debt to go do something with. And so, someone said, what about using a real estate account? I'm sorry. What about using a retirement account to buy real estate? Hafez asks.
You can do that. I don't know how it works, but I know that we had, a few years ago, we had some investor invest with us using their Roth IRA or something like that. I'm not an expert in it. Frankly, I don't care, but just, yeah. But you can do it. I'm pretty sure there's some way to do it. And you should do it if you can, because that's tax-free gains all the way until you sell it. Until you start to pull the money out or something
Would you begin investing in RE after maxing Roth and 401k or starting as soon as possible? Alexander asks. Great question.
Good question. I guess my initial reaction is max your tax-free stock accounts first and then start saving from there for your real estate. Real estate takes a while to save for. You can't just do it. But at some point you got to sit there and decide if you're going to pull the trigger or not.
This is not always just a perfect equation for every person as well. I have a pretty free schedule, Paul. I sort of understood I might have time to, or make time to take care of a home.
Well, it also depends on what, that's what I'm discussing, because sometimes he says, Paul, I'm so busy, and then other times like this, he's like...
Yeah, so we talked about buying a house, and then I realized, that I might not want to put time into this home for such a small return. For example,
because you're looking at the dollars.
I'm looking at the dollars. Yes,
not the interest rate. Right, not the interest return.
Yeah, so I can do one extra wedding and make X amount of dollars, which is the yearly take home.
Then you need to find somebody who will do it with you.
So that's another question: is where do you find what type of people? I mean, we've talked about property management. What type of people can do this? I mean, I would
find detail-oriented people, aka people the opposite of me.
Yeah.
That's why I didn't like property management. It takes detail orientation. You got to be very thorough. When you lease to somebody, you got to do a background check. You got to have them do the right paperwork. You got to make sure their place is ready. All these things. Me, I walk through an apartment in 4 seconds, go, oh, it looks ready. And Mary goes through it and finds 18 things wrong. I mean, that's just the difference.
Bogdan asks, do you ever consider buying land in development areas? It's interesting.
Yes, we have, and we sold the land. We never developed it. We want to build more, though. Yep. Yeah, we're actually breaking ground, supposedly, on a complex here in the next few months in Sandusky, Ohio.
Come on, really?
Yeah.
Tell me about it. Stop leaning on that,
I don't know if
Tell
I can really talk about it.
Oh, okay, great.
The boss upstairs would get pissed at me. The boss upstairs is, right?
Do condos have the same problem as buying something near a university? For example, in Oahu, this is Phoenix.
Oh, Phoenix. You're in the worst real estate market in the world.
They keep putting in taller, bigger, newer condos. This surely depreciates the nearby existing condo. That is true, actually.
I don't know if it depreciates it. It
looks, yeah. I see this in Myrtle Beach, right?
Guys, remember, so everybody talks about demand. Hey, a population is growing. This is all part of it. Let's say you have a town of 10 people, and there are 10 houses there. And everybody lives in their own house. Everything's good, right? Supply equals demand. 10 people is the demand, 10 houses, that's the supply, right?
Yeah.
Let's say 5 more people move into town. Now they have 15, and they build 2 houses. What happens to housing prices?
Go up.
Yeah, they go up a lot, because now you have 15 people that want 12 houses, right? Let's say somebody comes into town and builds 10 more houses. They're now at 20 houses, 15 people. What's going to happen to housing prices?
5 empty.
5 are empty. So what's going to happen to housing prices?
They go down.
Right. So we had a town that went up in population by 50%. This is what happened in Vegas, in Phoenix, and all these major markets that were growing so fast. And people ignore Cleveland. And I always hear people say, go where the growth is. No. Don't just go where the growth is. You have to look at what's being built as well. There isn't much building going on in Northeast Ohio. That's why we have some very consistent appreciation rates in our houses. In places like Arizona, Phoenix, and Vegas, where they think if you build something that's going to be sold immediately, you have oversupply. During the housing boom in 07, 08, we had about 1.2 million households a year in this country, but we were building 2.5 million units a year. So we had increased demand every year. So do that math right there, guys. If you looked at supply and demand, you had an increase of 1.2 million housing demands a year, households. But we were increasing 2.5 million at one point units. Well, guys, what's going to happen here? It's just a matter of time before they go, wait a second, we're building too many units. Just 5 years later, you need a total of 6 million, and you built 12.5 million units. You're going to have 6.5 million units sitting there doing nothing. What's going to happen to housing prices when that happens?
Yeah.
That's why it's not just about demand, but I've been on the board. I've sat at meetings where there are billionaires at the meetings and they all say demand is what matters. And I just go, you are, and I've literally said to them, if that's what you think, you don't understand investing, because you don't. What it's about is supply, demand and supply. If demand is big and supply is small, that's way better than the other way around. That's the whole thing. That's it.
If you've watched, to get a grasp on all this, one of Paul and I's most favorite movies is The Big Short. How many times, you don't watch movies multiple times. I've watched that movie.
Are you kidding?
Oh, that's right. I'm sorry.
Kidding?
I watched that movie. I have watched that movie over 100 times for sure. I mean, it's still very hard to grasp what the heck went on with the housing market, why it all crashed, and what people were doing to get there. But it talks about shorting markets and all this. And it's a great movie.
By the way, the housing market didn't crash because of, it was multiple things. But a big factor was oversupply versus demand. And then these weapons of mass destruction, these CDOs,
yes,
caused banks to not want to give loans anymore, which caused even bigger problem, et cetera. We got to the point where we were only building like 400,000 units a year. So we went from 2.5 million units down to 400,000. That's a huge drop. So then it just takes a few years and the supply catches up. All of a sudden you outsell the supply. And now, what's the issue? Why do people pay more than asking price for units now? The supply is not there.
Yeah, supply
in
is
Dayton,
not there.
Ohio, the supply is not
Dayton,
there.
Ohio, yeah.
Yeah.
Alex is just straight up asking, well, then what would you recommend for expensive, competitive locations like New York City, California, DC, et cetera?
If you can avoid them, do it. Unless you want to play just the value play of, hey, it's going to go up in value, not the value play, the price appreciation play. Yeah, California over long periods of time tends to outperform Ohio, but not by much. In fact, I wrote an article years and years ago that showed that waiting for that the appreciation rate you need to get to make up for the cash flow returns in the Midwest, it doesn't happen over long periods of time. It happens in pockets. You need to get like 6-7% appreciation over 30-year periods of time.
What are some sneaky ways
Ohio.
people can find homes that are not currently on the market and in a bunch in front of
Ask your friends.
Yeah.
Post on Facebook. I'm looking to buy a house.
Craigslist, Facebook.
Craigslist is a good one. But you don't need to find something off market. You just need to be an independent thinker. Don't let a realtor tell you what something's worth. You saw what I said with the realtor in Mexico.
Remind me.
Both of them. I said, listen, I'm going to ask you what you think the property will sell for.
Yes.
If I do one deal and it doesn't go well because you weren't right on the price, you're never going to hear from me ever again.
That's true.
Like, I'm sitting there saying, like, listen, if I'm in a new area, I will. And guess what? When they tell me their price, I'm just still going to discount it. They tell me, Paul, I think you can sell this house for 100. In my head, I'm going to say, okay, it's probably going to sell for 90 then.
Yeah.
And then I'm going to take my expenses from there. Because my job is to do a good investment, a great investment. You don't have enough money. You have 25 grand a year to invest in real estate. Find it one great deal a year. That's all you have to do is find one great deal, and you'll be worth a lot of money.
Folks, it's 2:00. We thank you for watching today. Again, go back through our videos. We've done tons of real estate walkthrough. We've analyzed deals. This is a long process to understand the ins and outs. Paul can certainly assist you using his real estate calculator to cover all these costs and really come up with the formula you need to learn about the cash flow on your homes. It's a lot of work, and it's a much more work than just buying and selling some stocks with some funny money. So we appreciate your help. We appreciate your views, and we welcome you in to join us on Thursday at 1:00. Paul, we have to come up with our topic, probably back to some stock analysis, current update on the times, the chaos that's going to be coming up with the inauguration.
Oh, I don't even care about that.
I know, I'm kidding. Go ahead, Don.
What did you say? Bitcoin.
Bitcoin, the volatility of Bitcoin.
What is Bitcoin at right now?
Yeah, it is interesting to check. I do feel sorry for a lot of the folks following people on YouTube when it's at 40 grand and people are buying Bitcoin and it instantly drops 30,000. I've sort of...
You don't feel bad for the people who bought it at 8, though.
No,
it's at 34,852 right now.
Yeah, interesting. And Mason saying, can you quickly analyze Tesla and NIO? That and more is coming, Mason. Thursday, we will...
Mason said that?
Yeah.
Mason's trolling.
I'm sure he's joking.
Yeah, he is.
All right, guys. We appreciate all you guys. Follow DJ Access Music on YouTube. He's in the comments. The greatest damn DJ you've ever seen in your entire life. He is incredible, out of Columbus, Ohio, our dear friend. And thanks for watching, liking, and subscribing. And we'll see you Thursday. A video every single day. And we have Tattooed Chef. Everyone's wondering, Paul and I redid Tattooed Chef, and it's coming out this week. So see our analysis for Tattooed Chef, Workhorse, and Lockheed Martin this week. We love you. See you guys.